Alright, hello everyone and welcome to another video. Now today we're going to have a session on recession-proof trading. I've done an article on it before, but it's always good to do a video with a live chart on it as well, so we can actually talk about what recession-proof trading really is all about and what it includes. If you're new to the channel, welcome. My name is Meydan. I'm a finance professional and a fintech entrepreneur developing mathematical cycle models to predict the future swing days, swing hours with a pricing model as well. So we're actually learning how to see the future, when the market is going to turn, what date it's going to turn, what time it's going to turn, and what are the possible prices that we need to look out for. So without further ado, let's get started. Well, first of all, let's take a look at the article and let's get me out of the way here. All right, now recession is a famous word, and whenever the market starts to go down, everybody talks about it. But what's the problem here? The problem here is everybody's talking about it once the market has already fallen and a lot of losses are already done. What's the point of that for us traders if we're trading day to day or even short term, right? We can keep in a position for like maybe a few days or so. So this whole idea that we're going into a recession, we're in a recession, we're in a boom, that's in a boom, and we're bouncing back and all that kind of hype is very childish and naive, because always you will get this kind of comment after the event is happening. It's happened already, right? So once the event has happened, you trying to now short because we're in a recession is like a silly thing to do, because you're probably going to be shorting somewhere at the bottoms when things are already done. So this is a big drama for investors or long-term traders or swing traders who keep in a position maybe for a few weeks to a few months, or I don't know, for a few days, depending on their swing strategy, right? But going basically purely on what people say or what the market has already done is not the best way to trade. The best way to trade is to know when the market is going to turn before it turns. All right, and this is why this is called, as you can see, recession-proof trading. And it really is recession-proof. Now, as you guys know, market's always going to go through three phases. We're going to go up, we're going to go down, or we're going to go sideways. So what makes it really a recession is when we're seeing a lot of sell-offs and that sell trend is continuing. Right now the market has been really in an uptrend, and we just had a major retracement, because think about it, the markets have been going up, we've been seeing all-time highs, and the only thing the market really did, if you take a look at it on a monthly chart, let's take a look at the SP 500 on a monthly chart. It's just following the trend line. Oh, and let's get me out of the way there. So for people to say, oh, we're in a recession, we've never had such a big fall like this, is a lot of bogus, because we've had them before. The market is still in an uptrend, and I actually talked about buying the market right here. Okay, if you're following the videos, you should be on top of it. If you're in the members area, you should be on top of it as well. Like, you know, like we're looking to go long in this zone, and you can see there's nothing really mystical about this situation. This is a channel, and this is a lower end of that channel, and the market is pretty much doing what it needs to be doing, and that's basically it. Just following a trend line. So are we in a recession? Well, we're not in a recession yet, but I'll tell you when we would be getting into a recession is if we fell below that zone there and that zone there, and we closed under it heavy. Okay, even so, even then we'd still be looking for buying opportunities because we're short-term traders. But really for us, knowing the day, the hour the market will turn, swing, is an edge, and it is absolutely recession proof, because even if we are going through a recession, you're always going to know the swing days, the swing hours, and the pricing, where you can minimize your risk and actually trade in the other direction as well. Now, as you can see on the SP 500, if I go to the daily, you will see we've got swing days here, right? See all the arrows here, okay? So as you can see, I'll go back all the way into June last year, right? You see how the swing days are working for us. We're going up, we're going down, we're going up, we're going down, we're going up, up here, down, and so on. Now, as you can see, sometimes it will work, sometimes it won't work, but sometimes what happens is we've got like a swing day from Monday, and the next swing day is like Thursday or Friday. Then you've got a full Monday to Friday in that direction happening as well. So knowing these things, knowing these levels before they happen, let's get this out of the way. Knowing these things before they happen is obviously for us a big advantage, because if you know the days the market's going to turn, for example, look, this is Monday all the way into Friday, Tuesday, Wednesday, Thursday, Friday. So Tuesday was a swing day going into Friday and going into Monday there. And then you know when the market is going to sell at the highs, because if you're at the highs and you got a swing day, you're likely to sell and you're not going to be buying out there. So this is all predetermined, pre-calculated. Okay, that's the whole idea. We pre-calculate the swing days. Now, if you're a long-term swing trader, that's fine, because then all you have to do is wait for those levels we've talked about and let the market come to you on a swing day. And if it comes to you on a swing day, you got a good upwards motion going into the next swing levels. Okay, so as you can see, this is a beautiful swing day because it's coming from this zone here where the gap was filled. Okay, here it was, the gap fill there. So the market taps into it nicely, okay, and it's a swing day. All right, and then you're like, okay, great, we've come down, it's a big fall, it's a swing day, let's buy, but not sell, because everybody in the news is talking about a recession. We are not in a recession. We're not. We're still following the trend on a monthly chart. We're like going up. This is a channel and we're going up. So I don't understand what all the fuss is about. Also, if you can see here as well, once you're trading with swing days, you are completely independent of news. Now, I've talked about this before, right? Once you've got on your technical analysis side, once you understand your direction, okay, and the direction is still up. On the monthly, you've drawn your charts. I look at the monthly, the weekly, daily, because my PST indicator gives me a pricing for the monthly, weekly, daily, and the intraday as well, depending on what what time frame I'm trading. Once you understand that that's it, and that's it, okay? So we're still continuing with the trend in an upwards direction, and entering that, as you can see from the lows on the weekly in the bar on a swing day, is perfectly fine, going all the way back up on your daily. Now, all of this, when the market is falling like this, everybody's talking about recession, but everybody's talking about it, like I said, too late. And this is why, once you got your technical analysis sorted out, if you're doing technical analysis like we do with 4 or 5 different perspectives of looking at the market, which is what you need to do. There is no one way of technical analysis that will work all the time in the market. That is bogus. And the first thing I say to a lot of people, I say, look, listen, we're going to do technical analysis, but it doesn't work, okay? And people say, what are you talking about? just paid you all that money. But if you do one way of technical analysis, it won't work. You have to be smart. Markets are changing. You have to change perspective. There was a really good podcast the other day about a professional trader, and he said, look, you know, you have an edge, it goes on for a while, and then you begin to see that you're losing. You got to dump it. You know, you got to say, okay, this was my edge, but it's no longer working, and these indicators, this strategy is no longer working, so I've got to look at it from a different perspective. This is why we learn 5 different techniques of technical analysis, because you've got to see the whole picture from different perspectives. Just looking at it from one angle is not really going to help you in your trading, right? So you have to kind of like widen your vision. So once you looking at it from a different perspective, a few different perspectives, and you are completely independent of the news. Now, a lot of people say, what do you look out for in the news? Well, personally, I just look at the data to see, okay, this is the economic data coming in. I just look at it to see if I've got something according to my trading hours that is relevant to these hours, because I can set up them. For example, today's Monday, right? I've got trade hour at 3:20, 3:30 my time. All right, so that's going to be around, let's take a look at that, 3:20 to 3:30. So 3:20 is here, right? 3:20 my time, 3:15 to 3:30, let's say, because I've got a 15-minute chart here. Okay, and I understand that I've got to keep an eye out for this, and so on. And then I've got, if the market goes in my direction, if it turns around, I need to look out for this 7:30, and this is also a nice spot to trade. So if I already know the good hours to trade for the indices in the US session, right, if you're trading the US session, then the only reason I'm looking at the news is, well, is it going to help my setup? Well, the news is coming out at 4:45, so me, by 4 o'clock, okay, by 4:05, from 3:30 to, let's say, 4 o'clock, that half an hour or 45-minute gap, I should have a setup period. Once the news comes out, that's it. The next news is at 5 o'clock. Now, this is nice to see, because once the news is out, okay, then you can say, wait a minute, the news is out. Now, after the news, I'm probably going to be at this trade hour. And if the market turns around from here, I know that highly likely we're going to go into the closing. So I've got 10:45 to look out for. 10:45, yeah, got to look out for 10:45. And then I've got closing here, right? So let's say 11:45 midnight. Okay, this is my time zone, UTC +3. So as you can see, knowing the hours in advance is obviously, like for us, is a game changer. And then I've got the swing days as well. So today is not a swing day, but you know, you see tomorrow is here, so I've already put something in there. I've put an arrow there. So if we go into the zone, tomorrow is a swing day, and we're going to be looking at selling it. So if anybody wants to buy, for example, I know the future swing day. If I want to go into that swing day as a day trader, so I'll be thinking to myself, well, where can I get in today? What price should I need to get in at? What time do I need to get in at to go there, and then I can sell off on Tuesday or Wednesday, all right? So then, knowing these are very, very critical, then obviously you don't have to give a rat's ass about independence, about the news or the sentiment. And the last thing you should be doing, really the last thing you should be doing, is listening to the news. Because the only reason all these TV channels and media channels got all these guys up there is to fill the time, okay? But none of these Tom, Dick and Harrys know any better than you, okay? Because you're trading, and they're not day trading. They put their guys from hedge funds, investment banks, portfolio managers, and so on. Those guys are not day trading like us, and they're not going to be giving you the levels and the hours and the times to trade at. They're just not going to do that. They're just talking about a general sentiment. Well, we're going through a recession. Well, according to what? Well, the market's down. Fine, but we're still in an upwards trend over the long term. And there's no change in that currently. If this channel was to break, and then we had an upward retracement and then chuck a UE down, then I'd say, you know what, we're going into a recession maybe for a year or so. Okay, but we're not there. So listening to these guys is just going to frustrate your trading, and this is why the most important thing if you're going to trade is education, so you can make an educated calculation about your trading. Okay, otherwise you're just going to get lost, right? So we don't want you getting lost. So this is why we can look at the news. Other than that, I don't care about the news at all. Now, opportunities and volatility. Because we're trading short term, for us it doesn't matter. We can go up or down, because think about it. Remember, on anything we trade, you know, we're selling, we're buying at the swings. All right, look, buying the swings, selling the swings. buying the swings. We're going to come up here, we want to sell the swings, okay? Look at up here, to sell the highs. And every time I've got arrows down here, that they're not major swings. One of the guys on YouTube made a comment, rightfully so too. He said, listen, these are not major swings. That's right, we are interweek swinging. What does that mean? It means, well, I'm not going to be using that day for a major swing unless I'm at a major level. I'm going to be using it at a major level if I am at a major level where they bought before to break out, see? And that's a situation like here. We had the same with Bitcoin as well, remember? So now, if this is a down, now that retracement is a major swing as well. You can keep for a few days. When I say major, like for us, it's like a few days swing. And then the market comes down, you see. Once we're down, it's a swing day. We're up again for a few days. All right. So for us, these swing days are not major swing days, but intra-week, making it an opportunity for us to swing and trade in the day. So we're always going to have opportunities with respect to volatility, and if you're a good technical analyst and in your longer time, bigger time frame charts, you're making good, clean analysis as to where to get in, then those swing days for you will be major swing days, right? So you can keep that position maybe for, I don't know, a few days to a few weeks, depending on, like I said, what your strategy is. So for us, cycle trading methods is all we need. Okay, we don't need anything else. It's a nice calculation, whether it's bullish or bearish, we do not care. What comes out in the news, we do not care, because politicians do not make the world go round. Okay, a lot of people say that Trump's tweeting and the markets are changing. Trump does not have the slightest idea about how this planet and how this system works. There has been thousands of people, kings, presidents, sultans, whatever you, in power. Nobody can change cycles of life. So Trump doesn't have an idea, he's just acting on instinct. That's all. The other thing is mathematical foundations, not hopes. This is why I don't listen to the news. Why do I care about other people's opinion? Are their opinions better than mine? If I am looking at the chart, this is where I need to get an opinion from. This is where my opinion should be coming from. What am I seeing when I'm trading on the chart? None of those guys on the news channels are going to give you something according to the time frame you are trading. So using a mathematical foundation, first of all, creates consistency. We're not hoping, we're not randomly shooting in the sky and hoping to get a duck or whatever, all right? So we want to make sure we're working according to the cycle, the rhythm of the asset that we're trading. No matter what you trade, same with euro dollar. All right, let's take a look at that one. Look at the euro dollar, for example. Okay, now if you take a look at the weekly chart, we are at the tops. Remember I said this zone's a sell zone, so you got to be careful here because we need to come back. Okay, we need to come back. And I talked about buying here. Remember on the monthly, I said, guys, this is the buy zone. It was spot on. Why? Because it was on our Fibonacci, remember? 37.5. So I said, this is the zone. Now, if I have something like this on the monthly, what do you think is going to happen? When the market comes down, I'm going to be looking at all the swing days on the lows to go up. I'm not going to be thinking about selling too much. I'm going to be looking to go up, aren't I? So then only the swing days are going to matter for me as a buying option to go up. Why? Because on the monthly, I've just said we've got to go long. And this is your long zone. And once you're in that zone, you're thinking, let's buy. Because if I tighten this up, let's see this on the, daily chart. Right, there you go. That's the low. that's the low, that's the high, that's your 37.5. So you'll be looking at buying swing days when you're in that zone and not for nothing else. You're not going to be really interested in all these sell swing days. Okay? You're just going to be focusing on the buying. So all you have to do is, once you get to that 37.5, is just draw a line and then say, well, every time we're down, let's go and buy. And that's basically it. And once the market is buying, you just come back to the same buy levels. It's a swing day, swing day, swing day, swing day. So you want to be pushing up, okay? And that's the whole idea. So if you take a look at it, the mathematics behind it is just solid. Now also, if you know swing days, swing hours, you've got built-in risk management. What does that mean? Well, it means if things go pear-shaped, you're the first one to know about it, because you got the trading hours to the minute. Now let's take a look at Thursday. Now last week I said, guys, this week is a bit sticky, okay? You know, I don't mind going up if the market comes down to pick up, which was why I said Dow Jones is looking like a better option, because with the Dow we had a nice breakout. Okay, so going up with it wasn't a bad idea. It was like Monday, Tuesday, Wednesday, swing day, going up, right? So that was looking okay, but the others weren't like, that great. So what does that mean? Well, let's say I made a mistake, and we do make mistakes. And let's say I decided to sell here. And then let's say I did sell on the highs. Okay, let's come to Thursday, right? This is Thursday. That's your Thursday. So look where I could have sold. On Thursday, Asia made these levels. The only place I could have sold, all right, are those levels there. Okay. Did I have a market price there? On the weekly, I didn't. If it doesn't match a PST, then you won't be trading, will you? The only thing you could have done, maybe that one, but that's not a PST price. The PST is down here. So if we had a PST price, we'd have said, you know what, we could sell at a trading hour at that price, but that never really eventuated. But let's say I just said to myself, well, it's a swing day, let's just nail it, damn it. Okay, and let's say in London or in New York you sold. If you sold here, you would have been stopped out just above the high there. Okay, and then the market comes back down to go back up into the trading hours, and by that time you're back down into Asia into trading hours. So if you're wrong, okay, then this thing doesn't turn into a swing day. The only thing you can do, if it is a swing day, you can sell off here again, which is exactly what I did. Actually, watch that video. On Fridays I don't work, but on Friday I said to myself, you know what, Thursday was a swing day, we're at the highs, and I made a sell right here with a trade to cover down here, which the trade was covered and I got stopped out. In fact, I showed that trade later on. So as you can see, the market sold, I covered the trade, and then the market broke out. Now I'm the first guy to know it's not a swing day, okay, when that happens. Why? Because I got stopped out at a swing hour. That worked fine. Then the market went the other way, okay, breaking above the high of Thursday, closing above it, then that is not going to be a valid swing day, is it? So I won't be staying in that trade as a seller. Right? So that's your minimum risk. Okay, now recession, just another brick in the wall, because life's all about waves, right? Like we've got spring, we've got summer, we've got autumn, we've got winter. It's all happening in the same period, right? Life is a cycle. So everything is a cycle, and recession has to be a cycle. This is why the markets have ups and downs, but for us, it is not a problem. If we measure it in advance, even if we are wrong in our measurement, we know we're wrong ahead of time, and we don't have to listen to anybody to confirm anything, because we've got time and price together. Okay, so that's really important. if we have a time-based strategy, you can check out all the waves, and this is exactly what we're doing. Look, in the euro dollars, well, look how we're checking out all the waves. You see? So where was I? So here, as you can see, we're just catching all the waves. Because we're day trading or trading for a day or a few days in the week, it's like an up move, then down, we're up again, down, up, down, up. You can see, you're following the heartbeat of the market. Remember, we're using the swing days with technical analysis. So you're not just randomly entering on any swing day simply because it's a swing day. That's not the way to trade. We're using two legs. You got to have time and price, like I said. All right. So it's just a matter of measuring the cycle. That's all it is. So then you begin to trade the structure of the market, like I said here on the monthly. Well, if we're still in a channel down here, then why is everyone talking about a recession? Okay, and why are they talking about the recession when the market came all the way down here and didn't talk about going into a recession when the markets were up here? Why didn't anybody say, well, we could be going into a recession and we're at the highs and so on? I didn't hear any of that. Everybody's talking about a recession when the market's all the way down here, and everybody's saying, well, we just had a really big fall. We had a really big fall on a bunch of occasions. If you look back to the market, if I do that, you can see that was also in 2020 with COVID. So what happened? Is that a recession? No, it's a bang down and a bang up. Same here again. A, B, C down, or 1, 2, 3, 4, 5 wave down. Market gets exhausted. 6, 7 cleans everyone out. Okay. Now all you have to do is when the market comes down into levels, you just look for, is it going to swing? Is it a swing day or not? So we're just looking at those levels where the market is going to buy or sell. Gap fill. Is it a swing day? You can check it all out. This is on a weekly. The same thing on a daily. The market bought here before. When it came down, was that a swing day? All right. So all of these things you can measure beforehand. So you don't have to muck around. Look at all these red lines. I had these red lines before the markets were even here, right? Like ages ago. So once I understand, we can sell the highs, okay? Where are we coming to the next red line? See, it's a calculation. It's a calculation about a cycle. It's maths. And world works on a cycle, works on a mathematical calculation. So whatever Trump says or does is irrelevant. Even if we had a war right now, like we had with Israel and Hamas war, like we had with the Russian and Ukraine war, we were already knowing when the market was going to turn. I didn't know there was going to be a war, but I knew when the market was highly likely to turn, and technically and swing day wise, it was correct. So this video is just to demonstrate again how recession proof we are, and knowing the swing days and the swing hours in advance is the best way really to trade. And also knowing what's going to happen during the day is a great bonus, okay? Because knowing what will happen during the day, like in today's video I said, guys, if we have, let's say, if we have a certain hour, if we're going to enter the trade, like this is euro dollar for example, if we're going to trade on the euro dollar, we're going to trade at a price. So that's a weekly price. That is a daily price level, the blue lines and the red lines and so on. I've done a video on the PST indicator. I've done 2 of them. You can go check them out. It's in the playlist somewhere. And if it comes down, we've got room to go up. Now, if we do go up, because it's a swing day Monday, right? So I've got a Monday swing day here. Well, I've got 2 arrows here, because if this Monday goes into the targets, right, up here on, let's show you that, on the PST indicator, right? Here's the PST indicator. Now on the PST indicator, I've got two levels here, the blue and the red line. They got levels on the PST which correlate to a price. If we head up into that price level, that 1244, 1272, if we go up into there, then Monday could turn into a swing high, knowing that is a bonus. Why? Because then on a Tuesday I can sell off. Okay, so then it matches your technical analysis, and then you're thinking, it's a swing day, we had a low, went up, now that could be a high. When's the next swing day? Well, the next swing day is coming in the next few days, and then I can measure that, and if I'm going to sell, I can push it down there, and if I'm wrong, I've got a really tight stop loss. Okay, so swing daying, swing houring, pricing, you're pretty much covered. Also here I've done a few trades where I work based on timing. Okay, in fact I've done one here with gold, haven't I? Now this is gold, alright? Now as you can see, I've done a video on this morning. I said in the video, guys, we're gonna have a disruption until we get to 130. So until 130, okay, this is 11:45, until 130 the market is tricky. Okay, so two things can happen here, as you can see. Now either we're going to push out and break out, which is what I'm expecting and anticipating, because we've got a swing day Monday, which means we had a swing day Friday and a swing day Monday, so going to the upside is like logical. Okay, I'm going to do that with a tight stop loss. But you might say, Marty, where's your stop loss? There isn't one, because I put it based on time. So what am I doing? Well, I know that we've got a critical point at 11:45 to 12 o'clock. And I know after 12 o'clock, we're going to have volatility, which is going to go to until 1:30 initially. And if that direction holds, we're going to go with that until 4 o'clock, right? Is it like 3:50, 3:30, right? Around there. What does that tell you? It tells me already I can monitor a trade according to time as well. And if I see something dodgy, I can be out even before the stop loss. Okay, so in any case we can put a stop loss, and if we are going to get out, let's say I did put a stop loss. Okay, that's the low the market did. Let's say I put it there, but I'm also going to be measuring and monitoring the hours. And if something does go pear-shaped and it's not quite like matching the hours, then I'm going to say to myself, well, wait a minute, this disruption isn't going in my direction, so why don't I just get out of it? Okay, and we'll wait for the next one. Now normally I open two positions, but here, as you can see, I didn't open two positions, I just opened one position. Why? Because this is not the best place to be trading. Okay, because the weekly pivot and the market can kind of like push down, and the only thing it's done with Friday's stop sweep so far. Okay, so we don't know. But what I will do is, if this goes in my direction, market will go up, let's say, in my direction. If we break out and then we come back down, I'm going to double up on the position, because I've got a direction now. I've retraced into my swing hour, and I've done it on a good price, like let's say the weekly pivot or the daily pivot, depending on the PST level for the day, the week, the month, whatever. If it's matching my level, and then I'm saying to myself, okay, now we can nail it, I'll go in and I'll double up. Why is that important? That's important if you want to scale your account, and I'll do another video on that later on. In the interim though, have a good week already. Hope your trading is going well. If you're new to time and price trading, it's really going to open your mind, and it's really going to help you out, because you're going to trade really relaxed. You're going to let the trade come to your lap nice and easy, and trade it with calmness instead of looking at the screen 24/7 and driving yourself absolutely nuts. All right, have a good one then.